So welcome back to the Edgewonk podcast. And today we are very honored to have Jared Tendler here. He is a mental coach for traders and also the author of The Mental Game of Trading. So hello and welcome, Jared. And thank you for taking the time.
Thanks, all. Thanks, Moritz. Good to see you guys.
Yeah, and thank you, Moritz, as
Yes,
well for being here. Thank you.
sure thing.
For our viewers, you said that we were going to sit together, you and me, and dive into one of our users' trading journals. So if you're an Edgewonk user, and if you would like Jared's opinion on your performance on your journal, then make sure to go to edgewonk.com/review, submit your journal. We're going to select the most interesting ones. So make sure you have a lot of trades there, well filled out. You use trade comments, you use your OTP fields, and all of the good stuff. We're going to pick one, and then we'll get back together and going to do a deep dive into the journal. So thank you so much for Jared, for agreeing to this. I really look forward to this and seeing what we can get out of the data.
Yeah, me as well. It'll be fun.
So I listened to a lot of podcasts with you in preparation, and you had a really interesting take on FOMO. I often see FOMO being one of the issues in our traders' journal. So if you can elaborate on your take on FOMO, I would really like to hear that.
Yeah, I think it's anytime you're dealing with a mental game problem, and frankly, any problem, you want to have some precision with an understanding of what's happening, right? What is the actual nature of the problem? And when you start to kind of peel back the layers of FOMO, it's rarely that you genuinely fear that you're missing out on the last opportunity you're going to ever have. I mean, intellectually, that's crazy, but so there are people and there are times where traders do genuinely feel like you have to capitalize on this opportunity because there's not another one to come. Sometimes it happens with traders who are, working on the side, and this is like the only opportunity they think they're going to get today or this week. They're swing traders. Maybe they only get 3 or 4 signals a month. But besides that, most of the time you feel FOMO because you hate losing, and missing out on an opportunity is really about your hatred of losing, or you hate making mistakes. You're a perfectionist. Sometimes it's more about the fear that if other people are making money and you're not, well, then you're kind of sliding behind the curve and you feel like you're losing touch with your goals. Sometimes it could be about confidence. Like if they're making money and I'm not, well, then maybe I'm not as good of a trader as I think I am. So I think what you want to do is start to kind of write down the specific details of what's going on in your mind, right? What thoughts are you having in that moment? So that you can then analyze it after the fact and really start to peel back the layers of what is actually driving and compelling my FOMO, because it's not usually just the actual fear of missing out.
Right. Yeah, it makes a lot of sense. But there's a huge gap, I think, it's always hard for me to get people from they know things intellectually, but implementing it and internalizing those beliefs to bridge that gap I think is a whole different story. How do you get there?
So there's generally 2 ways, but I think it's helpful to have a little bit of theory here. So it's called the adult learning model. I've also seen it called the 4 stages of competency. Most people are kind of aware of this instinctively, but there are effectively 4 stages, right? So the first stage is called unconscious incompetence. You don't know what you're bad at. Okay. Now, ironically, people can become very overconfident in this stage, right? And this is what happens to a lot of new traders, where they make some money early on, and they think they've kind of figured it out, and they're off to the races, and all of their dreams are going to come true, but they don't even know what they're bad at yet. So it's easy to become overconfident in that stage. Then, right, reality sets in. You become conscious of your incompetence, right? That's the next stage. And certainly a lot of humility can come here, but also you can also get ahead of yourself as well. And just becoming aware of what you're good at does not mean that you're skilled yet. And that's a big, big mistake. Right? And then I've seen this not just in trading, but in many other performance environments. So it's not until you reach that conscious competency stage where you're actually able to produce reliably a material change in your emotional state, in the way that you're thinking, in certainly some technical areas, and you can do that reliably, provided that you have enough energy powering the mind, right? So if you're bored, tired, distracted, fatigued, or if you're over emotional, right? Both of those scenarios are going to kind of pull back some of the energy that's powering the brain, powering the mind, and you're not going to be able to think. And if you can't think, you can't access that newer information. But the last stage is called unconscious competence, right? And this is where You now understand something so instinctively that you do it automatically. And you can think about certain elements of your trading that are that way, you know, driving a car, for me, playing golf, right? Certain elements of my golf game. So the point is, when you reach that unconscious competency, you have fully kind of crossed that bridge that you're talking about. And it takes far more repetitions than many traders think that it does. When they reach that conscious and competent stage, they think they're there, but really you're sort of stepping to the starting line of a race, right? And that's a complete delusion to think that you're now at the finish line, right? So think about how much time it's taking you to truly get something so instinctive that you can't do it wrong. It's way more time and what much more repetition than many traders think that it takes. But the other side of this is that sometimes we have these flaws, biases, wishes, illusions, hopes that end up blocking our ability to learn, especially from a mental and emotional standpoint. So intellectually, you might know that, all right, doing a journal at the end of every session is vital. I have to do it in order for me to trade well. But then I have a really good session and a really good week and a really good month. And all of a sudden now it's like, maybe I can skip out on this one. So what's that saying? It's saying that there's a bias, kind of in your mind that thinks that, oh, well, now that I've achieved these results, they're going to continue to happen. And that bias blocks your ability to access that knowledge that it's vital to journal. And now all of a sudden you start losing repetitions. So we have to correct the bias sometimes before you're going to actually be able to diligently apply the correction, which is journal, in those exact moments. Because in order to truly reach that unconscious competence, you have to be able to apply the correction, to perform properly, to think properly, react properly in the moments where it matters. So it's fine that you can journal effectively for a month, but if it all goes away after, having a nice big upswing, well, then what's the point, right? You're not really internalizing it. So you have to be able to apply it and correct it at those moments that are toughest for you. And the more that you're kind of aware of either the escalation of that emotion or the decrease of that energy, then that becomes the signal like, oh, okay, I'm clearly getting affected by something, and now I have to work harder on a conscious level to apply those corrections. Whereas usually it's the opposite. People think, oh, it's like now kind of automatic because I've built up some momentum. But momentum to me, with regards to learning, is quite weak. To truly be able to internalize something, you want to disrupt that momentum a lot. You want to go on breaks, come back after vacation, jump back into your routine without a doubt. That means that you can no longer do it wrong.
It's a matter
Interesting.
of reminding yourself day by day or in the more or setting reminders. How do you always keep that in mind, and how do you make sure that you don't follow?
Sometimes it's not overloading yourself. Like traders have a tendency to, they know how much they need to improve and they want to do everything at once. And when we look at, goal setting, sometimes, you look at it from a purely kind of results oriented standpoint versus a process and like what procedurally from a systematic standpoint again, not necessarily your trading strategy, but in, what does your, pre-session routine look like? What does your post-session routine look like? And I'm not asking for them to be, kind of carbon copies of every single day, but there needs to be certain elements that have to be there every single day. So if you're right now recognizing that your overall routine is quite weak, it might be too much to try to improve the whole thing at once. Pick one element of your pre-session routine, one element of your post-session routine, and ensure that you're going to do it every day for some minimum, right? There's a massive difference between doing a journal, reviewing some past trades, taking a few notes down about how you, perform that day for 1 minute versus zero. It's transformative. So if you have like kind of too much going on in your mind, and trying to improve too many things at once, then I think you lose that opportunity to continue to build the habit. So, I mean, to me, if it's something that is of that importance, you're writing it down somewhere that you're going to see it every day. And you've simplified it down to a few things that you know that you can do reliably, and you can do more, but you have to ensure that those, one or two things are being applied every day. And so it's the simplification, yes, absolutely, the reminders. And, the timing of where you do that is, somewhat variable. Some I have traders who will, have, Word docs open on their screen. They'll have it printed out. They'll have the sticky notes, but sometimes the sticky notes get a little crazy because you end up with like 15 of them and then they just kind of bleed in the background. It's like, to me, sometimes you want to keep it fresh. So some of my clients will rewrite it every day and then stick it. And there's just that one reminder there. So there's some connection and interaction to it versus it just kind of becoming a bit too kind of common in the background.
Yeah. Makes
Something
sense.
you said caught my attention regarding to unconscious competence or conscious incompetence. You said it takes a lot more repetition than traders actually think, which it got my attention because I think it's one of the best arguments for not system hopping or against
Yes.
system hopping, because basically every time you start with a new system, you start back all the way at zero. I mean, you do have some experience, you can read price action, etc. But to gain that unconscious competence, that takes forever, right?
Yeah. And here's the thing that often kind of gets lost. And this is why I say, generally speaking, 2 to 3 years is like the minimum to have some level of competency. Like you're, to me, still like a trading toddler at that point. But like it's way more than most traders kind of want. I mean, you would never hire a lawyer who is like 1 year out of law school, and they have been in law school for 3 years, right? And you don't want to go to the doctor, that's like still in the residency. I mean, they're not bad, right? But like, you want a guy who's or a doctor who's been out for a while and they've got some wisdom and experience, like 10 to 15 years would be our preference, right? So when you're talking about trading, if you only have a year or so, what you're not really aware of or calculating yet is the transformative nature of when a majority of your skills start to reach that unconscious competency level. Because at that point, if you think about it, if you now have automated something, it happens automatically, instinctively. You no longer need conscious effort, attention, bandwidth to have that access to it. It's just there. So when your mind is filled with all of these elements of your strategy, all of these elements of risk management and, mental game stuff, and like there's so much that you're thinking of, your ability to perceive what's happening in the market is significantly diminished. Right? We have bandwidth limitations. When your mind is full of all this stuff that you have to do just to not suck, then you're not really able to see much more of the nuances of what's happening in the market. I'm certain that both of you understand that transition that happened in your careers where you were able to now see more. And maybe it wasn't a singular moment, but when you look back on it, you're like, damn, like I can't believe I thought I was any good at that point, like 3 years ago, 5 years ago. I mean, I know that for me, the biggest transformation for my coaching happened after I wrote The Mental Game of Poker in 2011 because it took everything that I was doing in like kind of intuitively, right? And I had to think about it a lot. And I spent 2.5 years systematizing it into a book. And all of a sudden now my mind was completely freed up. The biggest jump I had in my career was over those following 2 years because now I was like a really clear sponge and could absorb so much information. And then now I was kind of off to the races. And then same thing happened when I wrote The Mental Game of Trading. Like my competency jumps when I go through that process. So if you're learning to trade right now, you're in a massive absorption phase. You can't then also look at when I say absorption, I mean like you're absorbed in what you're in your head. You can't also be absorbing market-based information as clearly and precisely as traders who have at least 3 to 5, 6 years of experience.
hmm I always notice that when I'm talking to my students and I explain them trades, we do some trade recaps, and then they ask me, why did you take this trade? Why not this trade? Sometimes I can't explain it because it's so unconscious that I just didn't feel right. But the other times I'm like, oh, I noticed this, and then they're like, you never mentioned that before. I was like, I didn't. Okay, but it's so fascinating even to myself because obviously I would say 80% rules based, 20% discretionary. But those 20% discretion, that's where my edge comes from. I would
Mhm.
say like 90% of my edge comes from that. So sometimes it's just really frustrating for both me and the students, but I can't help it. That's just
Yeah.
you have to go through the process. Right?
Well, there's two sides to it. So one is the expert-induced amnesia side, which means you're not aware of your unconscious competence anymore because it's so basic you just discard it as being relevant. Then
Yes.
the other side is like the true intuition where you have not formulated like the actual kind of construct in your mind for exactly what you're picking up on and why. Like how does this one factor interact with this one? It's there subconsciously, but not consciously yet. And I say yet because it will over time. Like you're gonna start to, you'll have things click in your head, but it may take a little bit of.
Yes. Yes.
When you when you talk about this absorption of all this information, be it price action or mental, the traders in the first 2 years, they probably will not have good coping mechanisms or tactics to make the best out of that. How can traders make sure they absorb more and do it very effectively?
So this is not a plug for your platform, but it's something I've talked about for years. Like journaling and writing is the absolute best way to do that. There's a concept I use called bloated brain, right? When we're absorbing tons of market data, when we're absorbing tons of education, when we're monitoring our emotions and our thoughts and our behaviors, there's so much information that's being collected, and you become like that saturated sponge that just can't hold anymore. And we've all experienced this, both in trading and elsewhere, where you just know that your brain is just like you're just done, right? And so you go take a break, you go for a workout, for a walk, you have a few beers, whatever, like you do something to kind of get away. But that's a really inefficient way of doing it, right? Because the mind is then being forced to digest all that information. Think about like a stomach for the brain that is sort of most noticeable when we might have been doing a lot of reading, journaling, right? A lot of reading, a lot of video watching or educational material, and then you go to sleep, within a half hour afterwards, and your mind is just kind of like replaying all the things that you've learned, and you're trying to figure things out, and your mind's kind of thinking. That is like getting a video camera into your stomach and watching your stomach digest food. This is you getting to watch your brain digest all that information. So to me, as soon as you can, I know it's hard sometimes at the end of the trading day to want to immediately start to journal. But again, from a habit standpoint, when you understand the value of it, I think it becomes a lot easier. And the value is just do a brain dump. Now, sometimes it's helpful to have some prompts or questions, but just get the information out in terms of what you've picked up on. And it can be quite random. It doesn't have to be organized yet. Doing that will give you an opportunity then to kind of move on with your life and truly reset. There's going to be some things that you didn't write down, and if they keep kind of coming back in your mind, go back and do that because you don't want to have it kind of blocking that processing. But if you get to the point where you're no longer kind of thinking about trading in a productive way, meaning you're just like kind of moving on with your life, there is processing happening below the level of your awareness. And when you rest and recover, like there's some things that will start to click in place. One of the things that traders don't do well is rest. And if you come back kind of still clouded from the things that you were thinking about working on and doing over the weekend or the night before, like it will cloud your judgment. Your sponge is not receptive. Like a sponge that you can think of it as ready for maximum absorption is just a little bit moist, and then it can absorb the most. It's not crusty, right? That happens when you're exhausted, you're fatigued, you've taken too much time away, you're kind of a little rusty. Right. So what does that sponge look like when it's ready for maximum absorption? We got to squeeze out as much information as we can, and that's what the journaling immediately or soon thereafter I think is the absolute best way to do that. And I've said this for years from a non-monetary standpoint in terms of the activities that you're doing. I think it is the most highly valuable thing that you can do, and it will generally translate into profitability the following days because the difference between you having a clouded mind and not being able to have that receptivity, and you're also vulnerable to your own emotional weaknesses, more vulnerable versus when you're truly like clear-minded. I mean, you all know the difference between what that feels like, and the journaling is, I think, the easiest, most cost-effective way to do that.
When you say brain dump or using prompts, when I do the reviews of the journals, I see so many different approaches. Some traders like to write long form, some traders put it in bullet points. I always find that long form definitely has a place, but it might be hard later if you want to come back to it to find the nuggets and to see what was going on there. So do you have some takes on how traders go about this journaling post trading?
Yeah, I think we got to look at kind of where you are, right? If you're somebody that has established the habit of journaling regularly and you are in that kind of long form style, then what you could do is have a new habit where the following morning you reread it and pull out a couple important nuggets so that you're right. At the end of the week, you don't have 20 pages of content that you now have to weed through. Um, but I think if you're establishing the habit and you haven't yet, I don't care what you're doing because quite literally for the value of removing or preventing bloated brain from being able to learn. Because when you're writing, you are learning, and that's part of the value of it too. You get another repetition. So you have the absorption, then you have the output. Those are sort of two different, kind of learning points. Frankly, you could just throw those notes away. I don't care if you ever read them again. You're getting value from doing it. So I don't care about the long form. I don't care about the book. Like, just establish the habit first. Once you've established the habit, then you can start to kind of look at optimizing a bit more of the process. And some traders like they don't journal because they look at a blank piece of paper and they just like their brain kind of But if they ask specific questions, for example, what were you working on today and how did you do? What were you looking at and what did you learn? What mistakes did you make or what do you think you can do better? What are you going to try to do better tomorrow? There can be overlap with these questions. The point is like once you sort of get started, sometimes the questions then kind of fade away and you just write whatever you want. Sometimes they are actually sort of necessary. Sometimes you could revise the questions, but the point is prompts are often helpful as a tool for those that are struggling to get started.
Totally. Makes sense. You mentioned also pre-trading routines and that they are very effective. Besides just preparing your charts, what are helpful things that trader can do in their pre-market routine before they start clicking buttons?
So I think of a pre-market, like the value of a pre-market routine, aside from what you just mentioned, right? Because if your strategy is not as systematized, and you do need to kind of know what you're looking for, like you kind of need to nail down the environment with which you are competing in today. Other than that, the primary mechanism or purpose for a warm-up is to help you to perform better. It's why athletes use it. It's why any performer does a warm-up, because if you sort of show up with what is your default, I mean, it might eventually lead to you performing at your best, but you're at risk of also being at your worst. So your warm-up to me is your primary defense against sucking, because that's kind of what you're handed every day. Like you've got your default C game, right? What is currently unconscious competence is the only thing that you can be assured of to show up. Everything else you have to earn. You earn it by sleeping well, by eating decent food, by being hydrated, by meditating perhaps, by going for a walk, and I'll get to the specific question, but like all the things that you're doing, right, help you to earn more of your B and A game, more of you at your best. So a more, we'll call it like kind of systematized warm up beyond those basics is to think about your goals, think about the whys behind your goals, because the most reliable and stable way to reach your peak is through the right motivation. Some traders need pressure and anger or overconfidence to reach their peak. But those emotions are volatile, they're unreliable. So, if you connect to your goals and can feel that kind of passion, that energy, that motivation, that drive, right? Then all of a sudden now you sort of set the engine is kind of going and moving in the right direction, because it simultaneously kind of blocks out the rest of the world. Right? You need to have full focus on what you're doing. And so procedurally, it might mean like you got to put your phone away, you got to close other browsers and things that you're doing and like really zone in, because today is a vital opportunity for you to take steps in service of your goals. Right? These things are not going to happen automatically. And if they are, well, then they're, in my mind, like not really goals, because they're just sort of too easy for you to reach. Like we go through the process of establishing thought out, conscious goals because we realize that it's going to take more than just, doing what comes easily. So goals number one. Number two is either that kind of mental, either that tactical, kind of prep, but also the mental prep. If you know that FOMO is an issue, that revenge trading is a problem, that you struggle to hold positions, right? You have to have corrections to those issues. And if you don't, then you can be reminding yourself during this warm up to take more notes, do some data collection in real time about those problems so that you can eventually develop a strategy. But once you've developed a strategy, you got to remind yourself of it. Maybe take a few minutes to kind of think about a few scenarios based on what you are anticipating is the market conditions and what you're looking at and what might be the anticipated trouble spots. Some people want to use visualization, use this sort of preparation to kind of think about idealistic ways. But when you look at like elite military, they visualize the 40 ways they're going to die, right? Because they want to be primed and prepared to defend against a wide variety of situations so they don't die, right? They're not envisioning, all glory and, winning the mission easily. So when you're visualizing, don't just visualize like having a perfect day. Visualize yourself having a perfect day because you did 15 things that were really hard correctly. And then again, the impact of that visualization to me is less than 5% of what's going to contribute to that impact, right? It's very, very minor. The biggest mistakes you can make is thinking that this preparation, thinking that this visualization or this imagery is going to guarantee or that you can expect to have progress happen. As soon as you do that, it goes away. Okay. Expectations decrease our focus and our energy. So you want to have a sense of urgency and priority of like, all right, these are the things that are important for me to improve on. Like, have at it. That's the work. And the thing with trading is you don't necessarily know when you're going to have to work hard. It's not like you go to the gym and you know that I'm bench pressing right now because the bar is there and I've decided to. At 9:30, at 11:30, you're going to have to, have this like intensive workout to avoid FOMO or to avoid, jumping into a position prematurely. You have to know and recognize that opportunity for yourself to push hard and avoid those issues is upon you. So the preparation to me is vital to be able to kind of detail out where those situations are and to know what you're going to do when they happen.
I found it fascinating that you said that about visualization because almost no one ever talks about that. They just say, "Oh, you visualize how you're going to make $5,000 today," but obviously that's not going to help at all. Or the traditional way of visualization, like I'm seeing a Ferrari in my driveway and all that stuff. What for me, one of the hardest challenges was always to hold trades through pullbacks. And then I would always close them out way too early, sometimes at the bottom of the pullback, and it just went without me, classic. And then I simply visualized the trade going against me, my take profit being up there, etc., and me holding through that, feeling all the emotions. That's what actually got me results then, right?
Yeah, I think if you're over relying on visualization, you're getting sort of seduced by things like The Secret and by quantum
Classic.
mechanics and this whole idea that's out there that like the universe is going to organize itself to support your goals. And I'm just too much of a pragmatist because if that were true, then the game is not how skilled are you at trading. The game is how skilled are you at visualizing and being better than others. I had this conversation with Daniel Negreanu back when
Oh, nice.
and made this exact point. It's on YouTube. I get regular feedback on it. Like the idea that you can like have that kind of powerful visualization of you winning the tournament or winning this hand means that your mind is the thing that's changing the card that's about to come. Like that you're somehow a magician capable of manipulating the cards in the deck and reordering them, or that you're somehow capable of manipulating the price action to move in your favor. I mean, these are ridiculous ideas. Now, again, I don't think
Agree.
so. So, like, visualization has value when it's put in the right perspective, not like it's this powerful aura determining magnet of profitability.
Yes, absolutely is.
Do you think it's it's better for traders to focus in their pre-routine on things that could go wrong and that they need to improve. When I do those reviews, I look at the performance. It's a negative performance overall. Then I take the filter and I want to see only the trades where the trader followed their rules and suddenly it's profitable. But those trades where he messes up and he goes outside of the framework of his strategy, that's what is ruining them. So focusing on the weaknesses is probably maybe often the better approach. Contrary to people always say focus on your strength, but I think it's probably not the whole truth.
So there's research on this, and it's variable. Some people don't want to think about the negatives, but they are oftentimes that's far more effective at learning. Uh, I think it's not like a one size fits all strategy. I would generally say that if it's a trader who kind of like recognizes their weaknesses, but just continues to repeat them again and again and again, then they don't really understand like the causality of those mistakes. And there might be something emotional there, might be something technical or both. But you have to be able to understand the corrections of those. Otherwise, you're just gambling, in my mind. You're gambling that you're going to spontaneously figure it out in the moment. And the reason you're gambling is because the proof historically says that you are losing at being able to make those corrections spontaneously in the moment. So that means you have to be prepared to do something better. And, you know, like you said, the things that you're doing well aren't really going to necessarily like trickle their way down to correcting those weaknesses. It's a common myth that your A game automatically causes your C game to rise. Sometimes you actually have to get in there and actively work to correct those mistakes. But for the trader that's, you know, much more skilled, they've been working on their weaknesses quite a lot and they've made some tangible improvements. Then I have seen instances where getting them to be more aspirational. Sometimes you can spend too much time thinking about your weaknesses and you kind of lose sight of what it is that you're good at. And so at that point, yes, now we start to aspire to more and that motivation to be at your best, that then kind of rises things higher because they've spent so much time understanding, correcting, and working on their weaknesses. They just need like kind of that extra little bit of energy and vitality and focus to avoid some of those more common mistakes. And sometimes having the aspiration of more does that.
Yeah, makes sense. When a new trader is coming to you, what are the first things that you do with them?
I tell them that I'm not the person that they should talk to. I mean, there's nothing for me to do. I mean, we're talking about like trading performance. If you don't know what your strategy is, I can't do anything for you. Right? The only thing you can do is to explore the difficulties you've had in other past performance environments. So if you were a kid, hated losing, and you know, through life you haven't done anything as seriously as trading, you've got like a second, you know, you have like a normal job where you're getting paid by somebody else and you haven't really lost a lot. Like it's pretty likely that, you know, in trading, just this environment is going to cause you to hate losing again. So you can start working on that now. Or if you know that you're a perfectionist, and that's probably likely going to cause some problems here, or you, you know, expect a lot of yourself. You have this illusion of control. I mean, you have to be fairly sophisticated at being able to look at the difficulties you've had in past performance environments that weren't necessarily punished, but they were small, they were there. You can do that, or you know, your fear of failure, fear of losing, whatever it is. You currently lack confidence in yourself. That is going to come out majorly in trading. So you can kind of assess the like more personal performance issues that you have from a mental emotional standpoint. But for me to work with you on a performance basis within trading, we need to know where your strategy is getting kind of blown apart. You know, I mean, beyond the basics of establishing a good routine, getting yourself in a good mental state, like there's not a whole lot that I can do for you. I need to know where it is that your strategy is struggling. You're not anywhere near developing like a an aspiration to be in the trading zone. You need 6, 9, 12 months to even have a chance of that being reliable. You know, before then, your intuition is it could be completely, you know, full of it. I mean, we don't know the reliability of it yet. So no, I mean, you need to have a decent amount of skill. And ideally, you have an edge that you know is profitable. But if you're really struggling to develop that edge because your mind is just like, you know, exploding, fine. I mean, we can do some stuff, but for the most part, the first thing you got to do is make sure you're profitable or at least close to it,
Right.
or would be if, you weren't so mentally, emotionally hung up.
So assuming we have a trader who has a consistent strategy, at least, maybe not quite profitable, but is ready to make the jump, what are then the things that you ask the trader look for and start working with them? What is the next step here then?
I mean, they need to tell me what their goals are, and they need to tell me what's getting in the way of achieving those goals, right? We need to know what mistakes they're making, what issues they're establishing, um, yeah, what things they can't break out of. Um, yeah, if they are at a point where they want to learn how to get in the zone more often, to learn at a higher rate, to sharpen their decision making process, like we can do that stuff. But generally speaking, in the sort of earlier stages, that is still a little bit premature. The biggest thing we're doing is making sure that again, we're not really at the discretionary stage yet. It's like executing the system. You can do that consistently, reliably through different market cycles, through, you know, uh, big runs. Like I want to know what's going to happen for you. When you have your first, 10K payout, or you, make 100K in the year. There's lots of different milestones that happen in trading, and there's no guarantees that you're not going to run into issues, as you continue to climb. Because what can happen a lot of times is we might envision ourselves, let's say it's a trader who was looking to quit their job and now, make the plunge, and they've been working and now they're kind of right at the precipice of being able to do that. That can be an incredibly pressure-packed situation. They've had no issues until then. So until that point, like, what am I going to do for you? I need to know where the inaccuracies are in your execution. That's the performance-based, version of myself. I know that there are other people that do like the trading psychology from hey, I'm going to help you kind of understand your personality so we can find a trading strategy that fits you well. And I'm not a trader, so I don't know how to do that. A, and B, it's just not that interesting to me, truthfully.
Right. Yeah. This was really interesting. I was getting at when the perfect client for you comes. What what is the thing that you do with them to help them get started on a better journey to a better mental game?
They fill out a very detailed questionnaire.
Yeah.
It's a long form. It doesn't take more than an hour or so, but generally speaking, it oftentimes is revealing to that client, right? They have ideas in their head, but like we talked about journaling, once you start to get it down on paper and are asked questions in a variety of ways to really assess the totality of your mental game, um, some things become more aware, some things kind of click in place. And I actually had a few people over the years who've said, like, I'm actually good. Like I now understand things. I'm going to take a little bit of time and see if I can actively kind of work on these things because it's been so revealing. Obviously that's hard to do on your own, but more power to you. I mean, my book is full. I don't need new clients every day. Like, so, the, uh, the questionnaire is helpful for us both so that we can prepare, in a relaxed environment. If I asked you, you know, 50 questions in a row right now on the spot, A, it's going to take more time than it would for you to write it out. B, you might get at best 80% of the information, right? So here you're talking earlier about, where's the edge here? The edge is in that extra detail. Well, the edge for me comes in you being able to provide that information. For, early in my career, I was doing that. And I found we'd get like 4 to 6 sessions in, and they were like, oh, they'd say something. And I like kind of scratched my head. There was, oh, I didn't tell you that? Like, no, like it would change the nature of what we would have been doing. It was like incredibly inefficient and frustrating. So I'm an efficiency guy. We both prepare in a relaxed environment so that when we start, like, I already have a thesis of what I'm looking at, and I'm asking a bunch of follow-up questions to confirm or negate that, which is honestly very much like, what you as traders do, right? You're looking for patterns in the market. I'm seeing patterns in you, and, the way in which people behave, and, you know, figuring out what the underlying flaws and are that we need to correct.
Right.
As you have worked with golfers, poker players, traders, would you say the issues that all these people have are pretty similar, or is there something that stands out, for example, in I don't know, in golf, maybe you have a tournament and suddenly 10,000 people are watching you. Are there different challenges than for other performance uh, sports? Or
I mean, at the end of the day, all the problems are the same. The way that in which they show up, the things that trigger them are different. Um,
mm,
you look at a poker player who struggles with variance. Traders tend to be pretty good at, poker players and traders tend to have the equal struggles. Golfers are awful at understanding the variance in the game, and it is a lot. Um, so that one tends to be a bigger issue, right? FOMO is much more of a problem in trading than it is in poker, than it is in golf. But like it does exist. So yes, there are some differences, but for the most part, like we are people first, and then we're performers second. So the kind of what you do is more about the conditions of the competition than it is about the specific issues that come out. So yeah, it's
mhm.
generally all the
You
same.
said you said variance in golf is a big thing.
Oh yeah,
How is
yeah.
that?
I
Wind
I,
or?
I had a client last year who had a really strong opportunity to win a tournament. He was leading with 10 holes left, hit an absolute perfect tee shot that like kind of took a weird bounce and then got hung up in the rough. And it was like a very weird lie, but like had that not happened, it would have rolled down. He would have had a very easy chance for birdie. Instead, he made it par, which was fine. And then that kind of like disrupted a little bit of momentum. I know like his for him, and then a few holes later, another player makes a 55-foot putt for eagle, and this type of tournament was not stroke play. It was based on score. So he got 5 points for that eagle versus 2 points for a birdie. And so suddenly now this guy jumps in the lead, ends up winning by a point. So yeah, I mean, these are very, very subtle things that exist, but sometimes and there is actually research on this based on the types of playing surfaces. I could take a machine and roll a putt down, and I do it 10 times. It will go in 9 times and miss once. So there's
Oh, that's so
variation in the
interesting.
playing surface that just naturally exists. And, there's like gusts of wind. I mean, it's an outdoor sport. There's conditions that are constantly changing. And yes, it is our job to figure out how to adjust to those. But sometimes you hit a shot that you, let's say, nailed perfectly, but then the wind just changes in the middle of it, knocks it down, goes in a bunker, plugs. Now all of a sudden you're struggling to make par, and you did nothing wrong. So as poker players and traders, we know that feeling quite well.
Yeah, true.
You mentioned the questionnaire, and I briefly heard you talk about this on another podcast. What are some interesting questions people can ask themselves to maybe get a better understanding of where they are, who they are as a trader, maybe where there are misalignments?
So I think one of the most important ones is, so you look at your goals, and I'm going to assume that your goals are fairly well known, but then I want you to ask the why question. Like, why do those goals matter to you so much? And I'm asking that question in a way that starts to tap into the personal connection that you have to them. That goes kind of beyond, trading for it, on its own. And some of that can be because of the implications of what the money you might make are, but try to connect to it more deeply. Like it's not just about I want to quit my job. It's I want to quit my job because I'm somebody who values personal autonomy, and I really care deeply about kind of being able to be in full control of my life. And I can't feel that way if I'm being paid by somebody else. So that's a very important question. Generally speaking, asking like, do you have greed? Do you have impulses for FOMO? Revenge trading. Kind of just like going through all of the major areas of the mental game. So we talk about greed, fear, anger, confidence, overconfidence, lacking confidence, discipline, procrastination, and just kind of assessing and asking yourself or asking questions related to all those topics just to see what comes out. And very often I will ask a question of, do you have any fears? And somebody will say no. And then later on, it'll say, do you feel failure? And they'll say yes. So, very often you kind of immediately may not say or think that you have some fear, but then when you're asked another question, like, do you have any greed? No. Do you get overconfident? Yes. How does that come out? It comes out by me, trying to squeeze too much out of a trade. Well, I mean, somebody else would call that greed. I don't care what we call it, right? But you've now identified a problem that, if you're only thinking about, well, I'm not a greedy trader, well, you wouldn't see it. And that's sort of the point of asking these questions and kind of covering all the major topics. So we kind of tease out some of those inconsistencies in our thinking.
I love that. In the journals that I review, I often see traders have those categories where they tag their trades. Some traders have like psychological, fear, greed, whatnot. But I often find it's very hard to identify the exact emotion. And then I see other traders who have it more descriptive, what actually happened. I bailed out too early. I moved my stop loss further away. And I think this is a way more objective way instead of this little bit subjective, trying to find the exact emotion that is happening there. So I really like your approach there. Yeah.
Yeah, I mean, and ultimately, I want both. I want to know specifically what you're doing wrong and kind of what's happening. And the what's happening is like physically, like I feel intense heat in my head when I'm angry, or I've got, my stomach is, nervous and amped up when I'm feeling fear. I want to know like kind of how your eyes might be sort of scanning different charts, how your posture looks, and anything else that you're doing physically, any other actions you're taking. Like we're really kind of trying to tease out the full scope of what's happening because it helps to make what's occurring a more rich experience. And then, yes, we come up with the thoughts and the emotions that are present too. All of that helps with the dissection of understanding what's causing it. And that, because that's ultimately what's most important. And it helps the awareness so that you can identify, okay, well, look, if I'm holding my breath, it means that I am incredibly fearful of what's going to come next. If I have a death grip on the mouse, it means I'm pissed off and I'm very likely to re-enter a trade. So like when we start to create these indicators of potential problems, like now all of a sudden you have the ability to be more in control. But if you don't have those, then you're just kind of like blindly hoping you're going to stumble upon that in the moment. Because as I said, you have to make corrections in the moment. Otherwise, you can't make progress. You can't reach that unconscious competence.
Right. I think it's about getting closer to the source. In the beginning, you're so far moved, you only recognize it after the fact. And then slowly you start to say, okay, that's what happens after I take a loss. And then this is eventually how I feel before I get into a trade that I know I shouldn't be in. And I see it so often in the journals. Traders keep writing, oh, I've done this again. And then you look at the next set, oh, I've done this again. And then at the end of the week said, I shouldn't have done this like the 10th time. It's so frustrating to see that they just cannot break out of the cycles. It's really hard.
Yeah, and some of that is the overconfidence that comes with being consciously incompetent, right? So the conscious incompetence is I see after the fact. I have hindsight, but the foresight is where you start to create the conscious competence because now you know what the patterning is that exists before the problem happens. And that conversion, I think, is easier made when you can remove that bias of that hindsight because it's so common to think that, okay, well, now I see it after the fact, and that's enough, and I'm good. Now I'll catch it next time, and that you're completely full of it. They are two different things. They are two very different layers or levels of learning. The second, obviously, being far more challenging. But you've got to get to the foresight, just like a trade. I mean, obviously, hindsight doesn't do you anything any good.
I would love to get your take on expectations because especially with social media, I think expectations are set really, really high for the average trader. I listened to a Tim Ferriss podcast once a while ago. He said the secret to a happy life is low expectations. I think this is like tongue in cheek, but when traders approach you, is it a step in your assessment to check their expectation level to make sure it's somewhat realistic, or how do you go about that?
Yes. But from a conceptual standpoint, I try to kill all expectations. I don't think it's about having low expectations. I think it's about understanding that expectations are dumb. Okay. And I'll explain why. Your only real expectation is you at your worst. Because the way that people generally think about expectations, and I'm not making some linguistic argument here, you want to If conceptually we're on the same page, I don't care if you call what you think is an expectation. Okay, but conceptually, most people think of expectations as guarantees. Now, they don't consciously think that way, but the implications of how they react when they don't meet their expectations tells me that they're guaranteeing that they're going to make money today. They're guaranteeing that they're going to make money in this trade today. They're guaranteeing that they're going to be, profitable and be able to quit their job when they're expecting themselves to have that happen. Because if they weren't guaranteeing it, then they would just keep learning and figuring out and, growing and understanding like how to be better. And they'd be very pragmatic. They wouldn't have fear and anger and lacking confidence and then overconfidence when they're meeting their expectations. They wouldn't have all that emotional chaos when those expectations are or are not being met. So they are implied guarantees. The only thing in my mind you can guarantee is you at your worst, because it's going to show up at all times. That your worst doesn't mean that you're going to be losing. I've got traders who are incredibly skilled when they're at their worst. They are not losing money. They're just not making as much as they could. So if that's the case, if your expectations are you at your worst, then what's the point of them? So to me, it's the conversion of expectations into goals that is a far more pragmatic way of looking at it. Because goals imply learning, they imply ups and downs, they imply mistakes and failures and setbacks, and otherwise it's not like a goal that's worthwhile, right? If you're trying to really stretch yourself and climb this mountain, you're like, I want to reach those heights. I have ideas of how I'm going to get there, but I'm not going to know what it was going to actually take until I can be there and look back. So if you're expecting yourself to be there, you're guaranteeing it, which means you're not really going to be learning as well as you could be because your mind now is expecting to be there and not really looking out for all the things that are necessary to learn on your way up. And in some respects, when expectations are really bad, you generally believe that you already have all the knowledge that you need to be there. So then you're really not learning and screwing yourself, 6 ways to Tuesday. So to me, we eviscerate and eliminate expectations entirely. They are useless, and we convert all of them into goals. And those goals can be short-term, long-term, whatever. But the implications of those goals is what creates much more emotional stability with your confidence, your motivation, and generally is just a more efficient way of achievement.
Mm.
When you talk about goals, it's the everlasting discussion, process-based, results-based. Obviously, you're talking about process-based goals, right? Or
No,
results
no. I mean,
also.
yeah, results goals are essential. Like you want to make $1 million next year, cool. I mean, I'm all for having the biggest aspirations in the world. You want to be among the best traders in the world, cool. Just understand what you're choosing, right? Understand the process, the skills, the knowledge that's required to even have a chance at that.
Mhm.
So no, like results and process are very, very intertwined, right? To me, if it's all process based, then like, what are we aiming at? What is this infrastructure we're building, trying to be used for, right? Uh, so yeah, we want to have those very tangible result goals, the
Mhm.
what you want, and then we want to have the process goals of all right, well, how am I going to get there? What do I need to learn? It's the kind of the what and the how that fit together. And to me, either of them on their own is weaker than the two of them together.
Great
But
stuff.
from a day-to-day standpoint, though, like intraday, to me, 95% of your focus is on the process goals. Over month, now we're talking maybe like 50-50. Like, because the other issue you can have with being overly process oriented is like you could generally be having some distinct weaknesses in your strategy, right? Especially if you're a more established trader who's not really responding to changes in market conditions because you are factually losing. Your P&L is eroding, your hit rate has gone down. Like if you're overly process oriented, you could be executing your strategy perfectly and be losing now because you're not adapting. So having those results as something that becomes more and more important as the time scale extends, I think is how you can sort of stay accountable. We don't want to do that prematurely, but if you're losing money on during a month, you're a relatively high frequency trader. You haven't had very many losing months in your career. You have a losing month. Like I think it would be a mistake to not look at your strategy and see if there was something that needed to improve. If there's something from the market that needed to be adjusted. Understanding that you executed every trade perfectly, I don't know. To me, it feels a little bit weak to not have a consideration of both. And I think sometimes people remove results as a goal because having them be there increases the likelihood that they're going to get pissed off or they're going to have fear or they're going to lose confidence. So like removing those goals ends up being a way of managing your mental game, but then makes you weaker in your motivation and maybe even your results.
In Edgewonk, we have that feature where you can hide your account balance because some people they don't want to see it, but I think it's quite funny because I mean your P&L is always going to be there. Why don't you want to look at it? It's very strange to me, but some traders think it helps them to stick to the process if they don't look at it every day.
Yeah, and I agree with that. I don't think you have to look at it every day.
Mhm.
I think it can be a distraction. If you're going to look at it, I would ideally like you to grade your performance first. You grade your performance, then look at your P&L. If they feel somewhat aligned, it's like, cool, you probably got lucky. If you perform really well and lost money, it's like, all right, well, I did my job. I did what I'm supposed to do. If that continues to happen day over day, then I will examine and see if there's more that I need to adjust. Maybe there are some subtleties that I'm missing, but um, yeah, intraday, like yeah, sometimes it is a distraction because you're up a good amount and now all of a sudden you take your foot off the gas and miss out on a couple trades. And, in the moment, it's not that big a deal because you made, a decent amount. But then like 3 weeks later, when you're in a drawdown, like, that cushion is a lot smaller and maybe a little bit of confidence isn't quite there. And so you end up kind of maybe pushing a trade a little bit more than it deserves and, or adding to it. I mean, sometimes it can be quite subtle how your mind will compensate for inefficiencies in your performance.
Mm-hmm.
Yeah, so this hour went by really, really fast. I really enjoyed this talk. So many interesting nuggets.
Yes.
And for everyone watching who is interested to check out more about you, where can they find you, connect you?
Yeah, best place is my website, jaredtendler.com. I've got a bunch of free worksheets that are a nice kind of companion to, my system. There's information on my book there as well as my community, the Mental Game of Trading Live. So if you want to, get more regular real-time feedback from me, that's an opportunity for you to do that.
Awesome. And I will put all the links in the show notes, video description, podcast description, so that you can check out and connect with there. So again, thank you so much for being here. It was really
Yes.
fun.
Thank you.
Absolutely. It's great
Amazing.
to see you both. And yeah, it was fun. Enjoyed it. Thank you.
Thank you.